Hello, Candace-Marie Mitcham here from Berkshire Hathaway HomeServices, Silverhawk Realty, East Idaho, and you are joining me for the Lending Lounge. Today we have Mike.Morrison from Movement Mortgage, and we are going to go back to the basics and talk about loan types. What can you get? Why do you want which loan? And more. Stay tuned. Hey, Mike, thank you so much for joining me as always.
Always happy to be here.
So I think we're going to bring it back to the basics today. So let's talk loan types, the whats and the whys.
Yeah, absolutely. So yeah, I just thought it'd be a good idea to just kind of revisit some of the major loan types and why people might use those. So today I wanted to just talk about the number one most popular loan type, and that's just your regular standard conventional mortgage. It's probably used, I would guess, 60 or 70% of the time across the country. Like it's definitely the heavyweight champ of loans. And so it is a great program for basically very good credit scenarios, very big down payment scenarios. It provides great terms. If you have your 20% down on this type of loan, it's going to allow for no mortgage insurance. It's also the only loan program that can be used with investment or second home properties as far as purchases go. The other government types that we'll discuss at a later time won't allow those. So it's a fantastic program. It's generally very accepting of different property types and different scenarios. It does prefer very good credit, as I mentioned, right? So it likes a good, solid credit scenario, but it can be very forgiving with large down payments and things like that, even if things aren't ideal and perfect in the loan.
So let's talk about that a little bit, because again, if we're talking to folks that haven't had a mortgage before, there's going to be some basic things that you and I just innately know, right?
Yeah.
So the conventional loan is where you're going to see where everybody talks about that 20% down payment. And then also when we talk about good credit, that's subjective to some folks. So what would you say would be a minimum credit score that we would be looking at? Of course, there's always nuances to everything, but typically what's a minimum credit score we're looking for with a conventional loan for approval?
Yeah, so conventional will actually go as low as 620. However, you're going to be penalized on an interest rate if your scores are that low. Ideally, you want to be above 700. And really the higher the better. 720, 740, 760, that kind of thing. But definitely in the 700s would be a sweet spot. That would definitely make us lean towards a conventional loan. Basically, on conventional, every 20 points on a credit score is going to allow for either a higher or lower interest rate.
Okay, so those are kind of your tiers as you're going through your credit score. Okay, perfect. Great.
Conventional also is a great loan to deal with condominiums. So for anybody who's looking at a condominium purchase, it is much easier to deal with condos and the overall association for those than it is compared to government loans. So that's definitely a very good positive feature of a conventional mortgage.
Okay, great. Now, when we get into a little bit more of a specialized loan product, what are the more common specialized loan products that we're going to see out there in the market?
So the second most common loan type is FHA, and that's probably used 20 to 30% of the time, somewhere in that vicinity. This is a great loan for a lot of people that don't quite fit into conventional for some reason. Lower credit scores, lower down payments, first-time home buyers, somebody that has just a little bit of a blemish in their, in their financial history, in their credit history, things like that. It deals a lot easier with bankruptcies and foreclosures and things of that nature. So fantastic loan program. It actually will often provide a lower rate than a conventional mortgage. However, it also always has mortgage insurance regardless of down payment. So it's definitely a differentiating factor between conventional and FHA. FHA loans will be a little pickier on the property as well. You want the property to be in pretty decent condition. Definitely doesn't have to be perfect. Doesn't have to be, a turnkey or anything, but there will be certain things that an FHA appraiser will be looking for to make sure they are in sort of primo condition on the house.
Yeah, and really what they're looking for is they're looking to protect that first-time home buyer, right? Because you get pie in the sky eyes and you're like, oh, I'd love a fixer-upper house until you realize the time, the money, that it takes to do it, and also all the layers that you might find yourself in once you peel the first one back. So, you know, they definitely want to do that for the first time home buyer, and they also want to protect their investment, right?
Yes.
So, and then let's also dig into some of the language on that too. Again, you know, thinking that we have folks that haven't had a mortgage before. So when we talk about mortgage insurance, one of the terms that they'll hear is PMI, right? And that's what that insurance is on your mortgage there. So just one of those terms when it pops up.
PMI stands for private mortgage insurance. And that will actually be on you'll get that on a conventional loan, going back to the conventional scenario. MI is just mortgage insurance. That's just coming from the government. There's really no difference in those two things. They are the same, but you'll hear both terms tossed around.
Exactly. Now, and again, talking about credit scores, right? Because that's the big thing where most people go, I don't want to know, or I can't qualify, and we've got to look at it in the face, right? So when we're talking FHA, where would be our entry level credit score, would you suggest in most scenarios for FHA?
Yeah, so a very, very forgiving program. Believe it or not, you could buy a home under an FHA loan with a credit score as little as 500. That's 500.
Wow.
So it goes pretty low. Now, ideally, you're going to want to be at least 580. 620 provides some different advantages. And then similar to conventional, the higher the better, really. You know, the higher you can get that score. But it is very forgiving. And not just of credit scores, but also of major credit events that you might have had in your past. You can utilize an FHA loan after just 2 years out of a bankruptcy. So that's very forgiving. And they'll get you back in with foreclosures as well in a pretty short time frame also. So, you know, some people think, oh, I had a bankruptcy, I had a foreclosure, there's no way I can buy a home now. It's going to be 7 years, 10 years. It's absolutely not the case. We have options and solutions to fit each scenario.
Yeah. And that's where I really want to emphasize for folks, because again, they're just like, oh, you know, I have this thing and it becomes like, it's only me. No, there's actually quite a few folks out there, unfortunately. And that's where working with a trusted professional, especially when you pair them up, right, to be able to really educate our buyers or our rebuyers if they've been through an event on what we can do to help them. And it's not scary. And we're going to be very tender with them and help guide them into a place of fiscal wholeness again, if you will, to the limits of the scope of what we do for our jobs, right?
Exactly. So those are two great programs. You know, we're utilizing those routinely, very, very often. Those are like we've talked about, the two most common types. The third type that I'd love to mention is VA. And so this one comes up less just simply because there's less veterans, right? There's less active duty personnel, less veterans. It is a fantastic benefit, just an incredible benefit for somebody that served. If you've been in the military, generally speaking, it's going to need to be more than 4 years. It is just a tremendous reward for having served. My wife is a veteran. We've used it personally, and I have
my husband's a veteran, so have we.
There you go. Yes, so you know.
Yeah.
And I've specialized in it for probably about 10 or 12 years now. You'll hear a lot of misperceptions out there in the general public about it, but basically, it can go to 100% financing, no down payment. It never has mortgage insurance. Right. So those are the two big benefits. You can do a down payment if you want to on it. Most choose not to, but you are absolutely allowed to do that. It also provides great rates. Typically, they're going to be pretty close to FHA, sometimes lower, and typically lower than conventional. So just truly a great reward. Similar to FHA, it will be a little stricter about the property type, right? It's going to, again, not perfect, but it wants it to be in pretty good condition. You know, basically the FHA and VA loan, they don't want a first-time home buyer, somebody with very little down, somebody without a lot of funds, which are all people that can qualify. They don't want that person to get into a home that then needs a whole lot of major repairs. Right. That could be a real bad situation. So that's the idea there. But a truly terrific loan option. One of the misperceptions is that veterans can only use it one time in their life. That is not true. You can use it as many times. As long as you keep paying it back, you can use it as many times as you want. And then on top of that, not only can you use it multiple times, you can have 2 or more at the same time. That's definitely a misperception out there. So if you're a veteran, don't wait to use it for a special occasion. Just use it. It's a fantastic loan. We will compare it to the other types too, right? If you're a veteran, we can look at a VA, we can look at an FHA, we can look at a conventional and decide which one's the best for you. It will almost always be the VA, but there
Right.
are some cases where conventional could be better, or FHA in some strange circumstances.
Exactly. Yeah. And the other thing that I'll mention too, I mean, I really like to make our time together, mostly about you, Mike, but today, because it'll help our veterans and
Yeah.
some other professions, I do want to give a little plug for a program that I'm involved in called Heroes Home Advantage. And there's various different vendors that are involved. There could be, title companies, there could be home inspectors. And what everybody does is we all give a little bit back from what we would be making as compensation to help the buyer pay for closing costs and various different things
Oh,
associated with their loan and getting into a home. So I personally give back 25% roughly of my
that's
commission
amazing.
that goes almost completely. I would say about 90% of that goes back to the buyer, and a small sliver goes for the administration of the program itself. It costs the buyers nothing to get involved with the program.
That's
And
amazing. I didn't know that. That's
yeah,
amazing.
yeah,
Veterans definitely need to look you up then in your area, and
exactly.
but that's incredible. And that
Well,
you've
and
opened up
also
other partners. Yeah.
exactly. And it's not just for veterans. I get chills talking about it because
Yeah.
I love my veterans. So it's if you're a veteran, you're active duty,
Hmm.
police,
Hmm.
fire, medical industry, or teacher. Guess what? That
Wow.
also includes homeschooling teachers. So,
Wow.
any questions, please give me a call. We really want to give back to our local heroes here that are helping our world do what it needs to do on a daily basis. And they're quite frequently our unsung heroes. So, more information about that, I'll post it down below. And then, when you want to talk about the VA side of things, I know enough to be dangerous, as they say. Mike.Morrison really knows a lot about it, and he can really step you through it. So,
Yeah, we definitely can. Yeah,
yeah.
definitely can. And then one last loan type that's very, it's not used as often as the others. It's the USDA loan. We sometimes call
Hmm.
it the Rural Housing Loan.
Yeah.
It's also another great program. Proud to say my company Movement was actually the #1 USDA lender in the country last year, last 2 years actually. But great loan program. The key to it is the property has to be located in what's called a rural area.
Yes.
And so that just basically means a low population area. There's a very easy way for us to look that up. In the state of Idaho, where you and I are both located, there's essentially only about 2 areas that don't qualify for
Right.
USDA. And it's the Boise area and the Twin Falls area. And it's a very small area. Even the outskirts of both of those areas qualify. So
Yeah.
fantastic loan program, comes with great rates. It allows for no down payment, just like the VA loan, has a small mortgage insurance premium, much lower than FHA or conventional. And it's a great loan program. It does take a little bit to qualify, but we walk you through that. So don't worry about that. We'll take care of you there and make sure it's the right fit for you. But otherwise, it is a terrific loan. It does have similar property requirements to FHA and VA.
Hmm.
Again, not perfect, but it wants the home to be in pretty decent
Right.
condition. Yeah.
Right. Well, and it's a hidden little gem here in the gem state, pun totally
Yes.
intended,
Yeah.
because it really is the majority of the state. And so few people really know about it. It
Yeah.
is a great tool to have in our pocket.
Uh-huh. Absolutely.
Now, we still have some rates moving around a little bit.
We do.
So for everybody who, again, is kind of brushing up on their beginner knowledge on getting into a home, can we touch bases a little bit on where rates are today?
Yeah, I would say rates are, averaging in the high sixes at the moment. Definitely been a volatile year. We've talked about that before. A lot of volatility right now, kind of some ups and downs. But right now, averaging in kind of in the high sixes. It's gone up a little bit overall for the year. We still expect the overall trend, and this is as of, you and I talking on March 19th. We still expect the overall trend for the year to be down. It just
Mhm.
doesn't do it in a straight line, right?
Right.
It's gonna kind of move around, kind of like the stock market. We still think there's great rate decreases coming in the future, probably mostly starting in the summer, most likely.
Yeah.
So if you're a buyer and you're kind of on the fence, what I would say is, if you buy now and the rates go down, you'll own your home and you
Yep.
can refinance whenever it's the best fit for you. There's no time pressure at all, no competition.
Right.
If you're a buyer and you buy now and the rates go up, then you're going to be actually pretty happy that you made a smart decision, right? It's like
Yeah.
you caught that sale before it ended at the store.
Exactly.
Right. And so there really is no downside if you're feeling ready, feeling qualified, and are ready to stop renting or living with family. Let's get you into a house and let the finances take care of themselves.
Exactly. And make sure you're working with professionals that are going to stick with
Yeah.
you, not only in the transaction, but beyond. So we
Yeah.
can follow up with you, keep you apprised on that equity that you're building for yourself and not your
Yeah.
landlord, and what
Yeah.
rate you were locked in and closed at. And when that drops down, we're going to keep in touch with you and go, hey, does refinance make sense for you right now?
Absolutely.
Yeah. Perfect. Well, so as you mentioned, we are both located in the wonderful state of Idaho. I'm in Idaho Falls, which is the southeast corner of Idaho, but I'm licensed throughout the state. So please do give me a call. And if you're looking for an agent anywhere globally, here at Berkshire, we can talk to you, talk about your needs, and also get you connected with the right agent that's a fit for you anywhere in the world. So do give me a call. Now, for Mike, you are licensed in a few places. So let's talk about that.
Yeah, basically cover the Northwest, so Idaho, Washington, Oregon, and then California as well. And my company, just like yours, is licensed everywhere. We can help you no matter where you might land in the United States. So if you have a need outside of those 4 states, we can certainly connect you with the right people.
That's right. So if you like us and we sound like your people, but you're buying elsewhere, guess what? Give us a call. We'll find our doppelgangers over in that location for
Yes.
you.
Yes.
Perfect. All right. Well, thank you as always for gifting us some of your time and lots of your knowledge, Mike. And we will see you next week.
Sounds good.